Good afternoon, friends. Myself, C. Nayan Kuthari, co-opted member of the CPE committee. On behalf of the CPE committee of the Institute of Chartered Accountants of India, welcome you all to this learning session. Friends, as we all are aware, Institute is always concerned for the updates and learning of its member. And through CPE committee, very consciously, in a very structured manner, these kind of the learning courses are being conducted not only at the branch and the council level, at study circle level physically, but also virtually, where through the digital mode, we are able to gain the knowledge from the people across the country and discuss, elaborate on the various subject. Today, similarly, on the same concept, we have got two eminent faculties with us, those who are going to deal with two very important aspect of the profession. One, the e-invoicing in GST, and another related to the overseas investment. The first lecture for the session is Mr. Mr. Rajesh Kumar Kumar.
Hello. Dhwani ma'am, you can start the session, ma'am. It seems there is some technical issue. You can start your session.
Yes, Dwaniji, you may start the session, please.
Okay, so I'll directly start the PowerPoint.
Dwaniji, 1 second. I'm Ajit Tiwari, Secretary of CP Committee. So, Nayanji, welcome to you.
Thank you, sir.
Yeah, now you are audible, sir. I think there was some technical glitch at your end, so we could not hear and start the session. Anyway, I think right now everything is okay. You can hear to us.
So earlier when I gave opening, yes.
So, sir, should we start?
No, everyone. So, sir, you may proceed, Nayan, sir. For the introduction of the members, Nayan Kothari is a co-opted member of CP committee. This year, he is, involved in various decisions, and activities of committee. So last week we requested him to, come on this platform to moderate this session. Nayanji, welcome to you. Now, dice is yours. So you may start, sir.
Thank you, sir. Friends, as we all know, through the CP committee and the able leadership of the CP committee and our CA Institute, we had been able to organize various programs, not only at study circle and branch level physically, but also on such a virtual platform where all we can meet and share the knowledge across. So looking at such an initiative, today we have got two eminent faculties with us who are going to elaborate on two different topics. First, we have got CA Dhwani with us, who is practicing chartered accountant at Ahmedabad, having vast experience of dealing in GST related matters up to litigation. She had also been deeply and actively involved into the teaching, training, and academics. She had taken various lectures to the members related to the GST, as well as she had been imparting knowledge to postgraduate students regarding the GST. So we are fortunate to have CA Dhwani with us to elaborate on this subject of to take charge of the site.
Good afternoon. Thank you, Nayanji, for a lovely introduction. To all of you all present here, my name is CA Dhwanisha and I'm a practicing chartered accountant from Panjim, Goa. Today's topic is the most hot topic that is currently in the GST. So okay, so let us start with the introduction on what is e-invoicing. Just like a normal invoice, how we would in any business generate while accounting or using an ERP or a billing software, you would generate a regular invoice. That invoice would have to be uploaded on a government specified or a government notified portal called an invoice registration portal, which is normally called as IRP. Once it's uploaded on this portal, the IRP will do the validation and they will generate an IRN, which is called a invoice reference number. Once an IRN is generated, In return, you will get something called an e-invoice. E-invoice is nothing but a electronic invoicing system, and it is mainly in which it will cover B2B are authenticated electronically by the GSTN, that is the GST network, on the common portal. Once an e-invoice is generated, the IRP, which is the invoice registration portal, will push the particular invoice to two portals. One is the GST portal, that is under your GSTR1, it will auto-populate there. And the second, on real-time basis, it will reflect on your e-way bill portal. The part A of your e-way bill will be auto-populated and you can directly generate there. Once an e-invoice is generated, it will take T+3 days on the higher end for it to auto-populate on your GSTR1. So that is basically what is an e-invoice. Now, in its 35th council meeting, the GST Council decided to implement this system of e-invoicing covering specific categories of persons. Initially, it targeted mainly the large enterprises. Over the period of years, slowly and gradually, they have brought in more and more enterprises into this bracket and expanded to cover the mid-sized enterprises as well as the small ones. Now, e-invoicing does not mean that the invoices are generated by the government portal. No. What e-invoice means is a regular invoice that businesses which they generate, the same are authenticated by the government-based portal. Now, government has appointed such portals. We will come to what is an IRP in detail a little later. But this is what an e-invoice means. E-invoice is not generated by the government portal. It is nothing but it is reporting the details of an existing invoice to a government specified or a notified portal. So that is called e-invoicing. The first IRP, which is the invoice registration portal, is launched by the National Informatics Center, that is the NIC, and their website is www.einvoice1.gst.gov.in. Before we move ahead to the various laws and the rules regarding e-invoicing, let us understand why exactly have we shifted from a traditional based invoicing, paper-based invoicing to e-invoicing. What are the main advantages that e-invoicing has over and above traditional paper-based invoicing? Number one, lower cost due to less printing of paper, posting, automation of minimum. Am I audible?
Yes, ma'am, you are audible.
Okay. So mainly this first point when it comes to advantages of having an e-invoicing over traditional paper-based invoicing is the cost efficiency, lower cost of printing when it comes to paper, postage, manual processing, all of that will reduce. There's no paper involved. If you don't want to file it in bulk files that are made of all the invoices that you have throughout the year, you don't need to do that anymore. Everything is online. The processing time is much faster. It takes milliseconds to generate an e-invoice. When it comes to environmental impact, since we are not using so much paper, the paper waste is much less. So the carbon footprint is much less. It minimizes the carbon footprint. There is much more accuracy and error reduction, since once you upload the existing invoice on the portal, the validation takes place. So in case there is any error, you will get the error immediately. The next one is payment processing. As soon as your customers get the invoices, the payments will of course be faster than what it would be in the olden days when you print, you post it, you send it, they get it, they will decide when to send you the payment. So the payment is faster. Accessibility is faster since there's a digital storage. The retrieval is better, archiving is better. Everything is better when it comes to digital. There's a proper audit trail maintained. Once where there is limited or no audit trail at all for physical paper invoices, there's very robust audit trails when it comes to e-invoices. There's DST, there's traceability, there's accountability, all making sure that all the regulatory requirements have been fulfilled. That is maintained when it comes to e-invoicing. Then there is something called integration with accounting system. I think this is one of the most important advantages of e-invoicing, is that your accounting systems are now integrated with the portal on the online, and accordingly the data that is in your account, same will reflect on your GST portal, same will reflect on your e-way bill. So if you see, they have just combined and they've integrated the accounting software, and they've made seamless transfer of data. And last and not the least, of course, is the global reach. It's so much easier. For example, if I am a party sitting in the US and I'm dealing with 10 parties in India, imagine getting different kinds and different formats of invoicing from every party in India. So now, when there is a standardization when it comes to the format, it also is easier for the people who are out of India to understand what our invoices look like. They know what to expect when the invoice comes to them, because everyone's invoices will look the same. So that is one of the biggest advantage I believe is global reach and standardization of format. So that is one big advantage of having an e-invoice. What are the benefits that a business should look into when they are looking into e-invoicing? First is it plugs the major gap in data reconciliation. What you upload on the portal, the same will reflect on your GST portal, same will reflect on your e-way bill. So there is a reconciliation and reduces the mismatch errors. Second is that interoperability of the various software. So if I'm dealing with Tally, I can seamlessly transfer my data through API on the invoice registration portal. So there is an interoperability of the softwares. One software can read the other one. If the formats of the invoices are the same, it's easier to read and easier to integrate. There's real-time tracking when it comes to invoices. There is even automation of return filing. What does that mean? It means the minute you generate an e-invoice, your GSTR1 is already, when it comes to B2B, is already auto-populated. You do not need to do it again. You do not need to punch in or upload GSTR1 figures again. There's a faster availability of genuine input tax credit. What does this mean? The minute you generate an e-invoice, it will also reflect automatically, auto-populate in GSTR2A as well. Since you are doing everything online and through the electronic portal, what happens is there are lesser possibilities of audits and surveys by tax information is a transaction level. As and when it's happening, you can see that there is lesser possibilities of audits and surveys because the audit trail is maintained through and through. And of course, there is a better improved customer relations and growth prospects for small businesses as well to do business with the larger enterprises. So these are the main benefits that e-invoicing has to businesses. Now, when the implementation started, they decided in their 35th council meeting that we shall introduce e-invoicing. So the first was on 1st October 2020, where they said from 1st October onwards, all those entities who have an annual aggregate turnover of 500 crores and above would be liable to generate e-invoices. Post that, from 1st Jan onwards, 100 crores and above, annual aggregate turnover. When I say 100 crores, 500 crores, 50 crores, it means your annual aggregate turnover in the previous financial year, if it crosses the threshold limit, you are liable to register or you are liable to mandatory start generating e-invoicing for B2B transactions. So from April 1st, 2021 onwards, 50 CR was the limit. It was further reduced to 20 crore from 1st April 22, and on 1st October 2022, it is 10 crores and above. And last but not the least, in 2023, 5 CR, the limit has come down to 5 CR. So as you see that slowly and eventually from large enterprises, it has come down to medium and now slowly to small enterprises. All are falling into the bracket of e-invoicing, and they have to mandatory follow the rules of e-invoicing. Next is, what are the inclusions? When they say e-invoicing, is everything and anything that a particular entity generates, do we have to generate an e-invoice on that? No. The point is that there are fixed documents that have been prescribed. Those documents only have to be generated through the IRP portal. Documents being tax invoices, debit notes, and credit notes. So if there is any shipping bill or import bill, those have to not be uploaded and e-invoice need not be generated. So tax invoices, debit note, and credit note. Now, which are the various transactions which fall within the scope? All taxable. The word being taxable business to business, that is B2B sale of goods and services, business to government sale of goods and services, all your exports, including DZ, with or without payment. Here the keyword is supplies to, not by, to SEZ. Then stock transfers. Even if there's a stock transfer taking place between distinct entities, even then, I hope everyone knows what is the distinct entities under Section 25. If you have the same PAN with different GST numbers in different states, you become a distinct entity. So even if there's a stock transfer between distinct entities, those stock transfers also will result in e-invoice. You have to upload the invoice on the IRP and get an e-invoice generated. SEZ developers as well have to issue invoices. And last is supplies under reverse charge covered by Section 9, subsection 3. So all those specified services which fall under reverse charge will also have to issue e-invoicing. Next is, what are the exclusions? Exclusions are B2C sales. B2C sales need not generate e-invoices. They cannot generate. All the nil rated or the non-taxable exempt B2B sale of goods or services will be excluded or exempted from generating e-invoices. Again, nil rated from business to government sale of goods and services are excluded. Imports, high sea sales, bonded warehouse, free trade, and warehouse zones again are excluded. Similarly, if you are supplying goods under reverse charge mechanisms to unregistered people, then again unregistered person, then in that case it will not attract e-invoicing. Now, which are the various businesses? Even if you fulfill the criteria of turnover, of the documents, of the transactions, all these criteria are fulfilled. Even after that, there are certain businesses which are flat out exempt from generating e-invoicing, even if they fulfill all the criteria that are prescribed. The first one is SEZ units. So they have been specifically exempt. So all those units that are under the special economic zone are excluded. An insurer or a banking company or a financial institution, goods transport agency that are supplying goods or services, suppliers of passenger transport services, suppliers of services by way of exhibition of cinematographic films, the government department or a local authority, and the persons who are registered under the two terms of Rule 14 OIDAR, that is Online Information Database Access and Retrieval Services. So they are exempt from e-invoicing. What are the contents? What does an e-invoice look? E-invoice looks something on these lines. So if you see on the right-hand side, there's a specific QR code. This QR code, if you scan, you will find the IRN and the details of the invoice. It is always one specific unique QR code for each and every e-invoice generated. There will be your GST number right at the top on the left-hand side with the entity name. Then there is an IRN number, which is a 64-digit hash code, which will be auto-populated by the IRP. The acknowledgement number, acknowledgement date, as well as the time, the place of supply, the document number, the document type, whether it is an invoice, it's a credit note, it's a debit note, whatever it is, that has to be mentioned. The date of the document, details of the vendor, the seller, the customer, the dispatcher, shipping details, all those details are further then mentioned. Then all the details about the goods that you are supplying, taxable amount, CGST, SGST, IGST, the discount if any percentage of tax applicable, HSN code, all of this has to be filled, or that will be visible on a e-invoice. Then there is the e-invoice is digitally signed by the IRP, which is the authority is by the GSTN. So the GSTN will be digitally signing a particular each and every e-invoice. So when we say what is the content of e-invoice, when you are uploading, there are two kinds. One is mandatory and one is optional. So the mandatory are 29. There are 29 fields that are mandatory that have to be fed. The rest are optional based on business to business, what they would like to have on their particular e-invoice. So in one invoice, up to 1,000 entries, maximum number of entries would be 1,000 per e-invoice. In special cases, based on request, it can be raised up to 5,000. Now, what are the mandatory fields? Are the basic details such as supplier information, recipient information, invoice-wise item details, document total. So these are all the mandatory fields that cannot be ignored. Otherwise, it will not be accepted and validated by the IRP. Now, understanding what is an IRP. IRP is nothing but a portal which will register your already existing invoice. So it is an invoice registration portal. The main purpose of this portal is to take your existing invoice, register it, validate it, make sure there is no duplicate, already an existing invoice that has already been uploaded, and then giving you an authentication in form of IRN, which is a reference number along with a QR code. So IRP is basically a registration portal. Now in its 43rd meeting, what the GST Council decided is that they decided to partner with private players, private industry players who could also launch their own registration portals for e-invoicing. So currently there are 6 IRPs, there are 6 registrations that the taxpayers can take advantage from. 2 being by the national. We will get through which one is each. So right now there are 6 websites that have been launched, and you can use any of them to generate your e-invoice. Now, what was the reason that the government decided was they wanted to streamline the procedure and reduce the burden of the government. As the turnover limits are coming down, the number of e-invoices are increasing. And with the increase in the mass amount of e-invoicing that are getting generated day to day in the country, it was getting very difficult, and the burden on the government portal was extremely high. So they decided, why not to bring the private players into this particular registration process. So they brought in the private players. They wanted to reduce their burden. Further, they also wanted to aim at getting developing the infrastructure and widening the requirements, support for widening the requirement of e-invoicing. There are fewer chances of technical glitch that if one particular portal is not working, the taxpayer can go to the next portal and get their e-invoices generated. So there is no dependency on only one. So if there is a breakdown of a particular website, then we as taxpayers have 5 other options. We can go to those options and we can generate our e-invoices. So that was one of the main bottlenecks, that if there is a technical glitch on a particular website, the government has given us an option that yes, we can move our traffic to the other 4 websites, 5 websites. There's this, another thing is there is a problem of single point failure of having one system. For example, when we are trying to file GSTR1, if there is any technical glitch in the entire country is on a standstill and none of us can file GSTR1. To avoid such a bottleneck, the government decided to introduce private players into this particular registration process. The private players also bring to the table a wide range of services such as invoice generation, cancellation, validation, reporting, insight, analysis, and better visibility and control over the invoice process, and it makes compliance apparent and easier. So that is one of the main reasons why private players were brought into the registration process. As you can see in front of you, that this is how and the entire process, back end process would ideally work when it comes to e-invoicing. So we as taxpayers, if you see the chart, the second chart below, we as taxpayers on the right hand side, we will upload our invoices on either of there are 10 websites available, but currently only 6 have been operational. So on any of these 6 websites, the taxpayers can upload. They go on a cloud and they check whether this is a duplicate invoice or not. To avoid duplicacy, they will check, they will validate, and then they will generate an IRN. Once the IRN is generated, if you see the chart above, after the IRN is generated, the same will go to the GST system as well as to the e-way bill on real-time basis. So this is how an e-invoice would ideally work. The back end would ideally work. So this is the repository where it would work. Now there are 6, as I've already mentioned, there are 6 websites that is available for registrations of invoices. 2 are by the NIC. Then there is Signet IRP. There's ClearTax IRP, which is Clear IRP. There is Ernst & Young. And the last one is IRIS by IRIS Business Services. This data which you see in front of you is available on the GSTN portal, where each portal that is available, that is specified by the government, what is the functionality, what is the API access available, what are the limits, what is the website that you can go, what support contact you can get. So they have made a chart to make it very easy for the taxpayer to understand, and they can choose from any of one of the 6 IRPs to register their invoice into e-invoices. Even though the private players have been given a little bit of game in this particular registration, the URLs are owned by the GST network. Now, when they say that they have reserved 10 domain names, they own the 10 domain names. It starts with e-invoice1.gst.gov.in, e-invoice2, e-invoice3, up to e-invoice 10 has been owned by the GSTN, which is the GST network. Now they will configure the URL and enable the same to the IRPs. The control and the configuration is mainly still lying with the GST network. Now, when the IRP needs to sign each and every e-invoice, that signature is also procured by the IRP from the GSTN. So GSTN will be the formally authorized signatory, and on behalf of GSTN, the e-invoices and the QR codes are signed by the IRP. Okay, so most of the ownership and the regulations, they make sure they meet and they seek regular governance from all these private players and make sure that they are on top of the things when it comes to law, regulation, compliances, and transparency. Now, what is the salient feature of these portals? Salient features is that it is only a pass-through validation portals. They do not generate and generate an IRN, which will be generated instantly within sub 200 millisecond duration. It's as fast as that is upload. For the multiple IRPs will be made available. Therefore, it is distributing the load amongst all of them. Okay. One of the main features when it comes to e-invoicing and generating e-invoicing, me as a supplier, if I have generated an invoice and uploaded it, to generate an e-invoice, I do not need to sign that particular invoice. So the DSC of the supplier is not required. Only login ID, password on any one of the portals, you upload, you click, on a click of a button, your e-invoice is generated. There is no requirement of us using a DSC to further validate a particular or verify a particular invoice. So that is one good feature when it comes to e-invoicing. Another rule when it comes to e-invoicing, unlike other normal invoicing, these invoices need not be issued in duplicates or triplicates. One e-invoice is enough. Now let us understand how to generate an e-invoice. The process of generate is the minute the GST Council takes a decision that up from 5 CR and above, all the taxpayers are eligible for e-invoicing. The portal by default enables all the GSTINs based on their 3B of the previous annual aggregate turnover, and they are enabled for e-invoicing. In case it is not enabled, then please visit the portal and get yourself enabled. Mostly all are enabled automatically, but if they are not enabled, in case any GSTIN is missed out, then you can go on the master IRP portal, which is einvoice.gst.gov.in, and get yourself enabled. Once you are enabled on the IRP portal, you will register in any of the 6 portals. You register yourself, you get a login ID password, you upload the invoices, the invoices are validated, and you get an IRN and an auto population of e-invoices generated. The e-invoice verification is possible. You scan the code. So there is this code that is we have already mentioned, that is that reflects on the e-invoice. You can scan the code and check the IRN details and the invoice details there with an app that is on the portal by on the app store by the GST. Then there is an e-invoice master. So e-invoice master is done by as I've already mentioned, that einvoice.gst.gov.in. That is a master portal where you go to that portal to know everything about e-invoicing rather than going to 6 different portals. So as there are a number of IRPs, that are 6 to be in particular, GSTN has developed a comprehensive e-invoice master information portal which can be accessed by einvoice.gst.gov.in. This serves as a one-stop resource for all e-invoicing related information, and it also offers access to master codes along to also check your enabled statement, IRN functionality, check whether a particular code is working or not. All of that can be done on a master code. So this is what the entire process that we have discussed till now. Number 1, generate an invoice on your ERP, accounting or a billing software. Upload the JSON file to any of one of the 6 portals. The IRP will validate and generate an IRN. This IRN is digitally signed and along with a QR code. So once you have received that, that will auto-populate to the GST portal as well as the e-waybill portal. And the other one, once we get that e-invoice, we can give it to our seller who will then process the payment. On the other side, it gets auto-populates on invoice can be generated. Even though there are 6, I have time only to explain one. So let's take the first portal which was launched, that is the NIC portal. The website is www.einvoice1.gst.gov.in. So the portal looks like this, where first the easiest way is if you are not integrated with an API and you want to do it with an offline tool, this is how you will do it. You go on after registration, of course. Once you are registered on this portal, then you go to help, go on tools, and over there you will see bulk generation tools. Click on that, and this is what you will see. There are different JSON preparation formats available. Based on your requirement, download the JSON which is the most applicable to you. Now, format A is a single worksheet where all the details of B2B, all the entities, everything is in one particular sheet. In format 2, there are 2 sheets. In format C, there are 5 sheets. In format D, there is a single worksheet. Again, each one has its own things, that A format can is applicable for these kind of transactions, B for this. So go through it, see which is the most applicable for your business, and download the Excel sheet. Fill the Excel sheet and create a JSON with it. Once the JSON and the Excel sheet is filled, you log into the invoicing portal with a login ID and password. In case it's not already enabled, please enable yourself first, and then you will get a login ID password. You will login ID, get your login ID similar to GST portal. Now, when you are doing that, it is a 2-step verification process when it comes to enablement. 1 OTP in your SMS, one will be email, same as your GST registration. Once you get your ID password, you go to the portal, log in with your ID and password, and this is what the dashboard looks like. How many e-invoices have been generated in the current month, how many have been cancelled, and on your left hand side there are various tools available to you. One is under e-invoice, there will be bulk upload, cancel, print, bulk IR, and cancel. Then there is MIS upload. So under MIS, you will see generated e-invoices, cancelled e-invoices. Then there is user management, there is API registration. You can change your password. You can update your contact details. You can generate or check your e-way bill data. You can go directly. If you see right below the goods and service tax and our emblem, you can see below that e-way bill portal. If you click on that, you get directed to the e-way bill portal as well. So this is what, once you click on this generate e-invoices, when you click on that, you will be directed to this page. On this page, you will, that JSON file which was generated when you did it on that Excel utility, you upload that JSON file here, which looks like this, e-invoice underscore version y underscore JSON. This is what the JSON file has been uploaded. And once it's uploaded, this is what it will show you, that total number of contents invoice in the file, one number of items in the file. What does that mean? One invoice has 16 line-wise items. So we have uploaded 16 line-wise items for one invoice. Invoice has been uploaded successfully and there is no failure. In case there are error, you download that error JSON, again, open it through the utility and see what the error is. And once it is successfully uploaded, this is what it looks like. It looks like invoice number, invoice date, the GST and invoice number, acknowledgement number, IRN, and you have an option to download the PDF format. If you download the PDF format, an e-invoice along with the QR code will be visible. So this is what it would look like if you had to upload one e-invoice. You can similarly do just change the requirement. So this is okay to go ahead by using a free offline utility. And I believe each IRP has a free offline utility which you can make use of. Then for bigger entities, there are paid softwares and things like that. But since time does not permit me to go further into this in much detail, this is how you would generate a normal e-invoice on the NIC portal. Now, till now, there was no time limit that once I generate generate a particular invoice on my accounting or a software billing software, there was no time limit when I can upload it on the portal and generate an e-invoice. But slowly we are getting to that point as well, where there will be a time limit that if you are generating an invoice on the 1st of November, we have to make sure that on a particular date, that's the last date when you can generate an e-invoice of that original invoice. So currently the latest advisory that has come out is on 13th September, which says that if your annual aggregate turnover is more than 100 crores, then in that case, there is a restriction of 30 days. That to ensure timely compliances, taxpayers in this category will not be allowed to report invoices older than 30 days on the date of reporting. So that has to be made sure, and that has come into effect from 1st November, from the particular date. Now, for example, on 1st November, if I have issued an invoice, I cannot generate or report that e-invoice on the portal anytime other after 30th November. So this is the proposed implementation, and this was implemented from 1st November 2023 for all those entities whose annual aggregate turnover exceeds 100 CR. Now, once we upload a particular invoice and an e-invoice is generated in return, can I cancel it? Yes, I can cancel it, but make sure that you cancel it within 24 hours. If you don't cancel it within 24 hours, you will not be able to cancel the e-invoice on the e-invoice portal. Then after 24 hours, if you want to cancel it, you will have to go to the GST portal and make the necessary changes over there. Similarly, if you are able to cancel it within 24 hours, that particular invoice will show as cancelled status in your GSTR1. And also, for example, I uploaded an invoice number 1. The invoice value was 100 rupees. I realized that there is something wrong with that invoice. It should have been 110. So I cancel that invoice and I re-upload that invoice. But now when I re-upload this particular invoice, I cannot use the invoice number 1 again. It is not allowed. You will have to use the next invoice number. So typically the process would be you can make it 1A if you want to, but you will not be allowed to use the same invoice number again. So even if you have cancelled it, the portal will not accept the same invoice number again. Further, there are queries regarding amendments. Amendments are not possible when it comes to e-invoice. So if you upload the 100 and I want to amend it and I want to partially change it from 100 to 110, that is not possible. The only possibility is cancel the e-invoice and re-upload a new invoice. In case you have crossed 24-hour limit, then go to the GST portal and over there you can use the amendment option which is available to us. Or if the invoice is completely wrong, then you can make the necessary changes over there. Now, these are frequently asked questions which have been answered by the GST portal. One is the e-invoicing applicable for nil rated or wholly exempt supplies? No. Why? Because they are not tax invoices, they are bill of supply. So bill of supply is not covered under e-invoicing. Hence, you will not be you are not eligible to generate, or it is not applicable for you to generate e-invoicing. Next is, if again about distinct person, I think we've already covered it. So if there are different GSTINs, but the same PAN, even then you have to generate an e-invoicing. Next is import. Again, import is e-invoice is not applicable on bill of entry. Now, when they say do SEZ developers need to issue invoices? Yes, they need to issue invoices because the exemption is to SEZ units, not to SEZ developers. Hence, SEZ developers need to issue invoices if they are fulfilling the threshold limit. Again, in the exemptions, free trade and warehousing are exempt. They are not exempt. They are exempt. Hence, they have to. Need not issue e-invoicing. Then is e-invoicing applicable to notified persons to SEZ? Here the question is, if I am supplying to an SEZ. So the exemption is if an SEZ unit is making a supply. But if I am making a supply to SEZ, yes, e-invoicing is definitely applicable. Now under one PAN, one GSTIN falls under the SEZ unit, one falls in the DTA unit. Same legal entity, the entire aggregate annual turnover of that particular PAN exceeds 5 CR. However, the turnover of the one DTA is below 1 CR. Then in that case, does DTA fall under the category of e-invoicing? Yes, it does. Because when we have to see the threshold limit is of the PAN, not of the GSTN. So annual aggregate turnover is more than 5. Domestic area unit is the e-invoicing applicable to. It is for 9 subsections 4 or to import. Then no, it is not applicable. Then there is no, in the current schema, there are certain provisions are not there to fill in the details of certain details of a particular invoice. Then in that case, what do you do? If there is a hotel, beverages that are cold drinks, which are does not have an option for such a thing. Now, is invoice number will be different. is generated by the portal. If we've already dealt with this, no, it need not be. Then can an invoice, we have dealt with this, no, same invoice number again cannot be used again. You will have to change the invoice number. So with that, I think I've covered major chunk of what are the various rules, regulations, and ways of generating invoicing. If there are any questions, I would love to take some.
So, ma'am, we have few questions for you.
Okay.
Um, the first one is whether ITC is allowed to buyer when the supplier is liable to issue e-invoice but not issued, or e-invoice is uploaded subsequently, but buyer invoice copy does not contain QR code and hash code.
No, so the e-invoicing will not be considered as a valid e-invoice until and unless the QR code is visible on the particular e-invoice. And secondly, if the supplier has not generated an actual e-invoice, have a QR code, that means there is no e-invoice generated. And if no e-invoice is generated, then it will not reflect on your 2A. So that is the thing. So you will not be eligible for ITC in that way.
Okay, and the second question is, do we require to generate e-invoice where sales are primarily being made to government departments who have obtained the GST number based
Sorry,
on
sorry,
10?
I didn't get you.
Uh,
Sorry, I didn't get the first
do
part
we
of the question.
require to generate e-invoice where sales are primarily being made to government departments who have obtained the GST number based on 10 numbers?
I'm sorry, the voice is cracking. I didn't get it. Do we have to generate an e-invoice if there's a supply made to a government department? That's where I am at. Or could you put it on the chat box so I can have a look at it?
Being made to government departments who have obtained the GST number based on 10 numbers.
Yes. See, if the supplier who is making a B2B supply, then yes, they have to issue an e-invoice, even if it is to the government. Yes.
Okay, and the third question is, do a government company require to generate e-invoice where majority of sales are being made to B2C customers?
It's irrelevant. The minute you say government, it is exempt from e-invoicing provisions. So there will be no requirement. It will be excluded from e-invoicing.
Okay, and the last question is, how to make e-invoice in case of online selling like Amazon portal?
Amazon itself will be generating e-invoices in these cases. E-commerce operators will be generating e-invoices on behalf of the vendors.
Okay, and there is another question that we just got. Do we also need to raise e-invoice in case of exempted goods, like someone is dealing in wheat?
No. So if you see in the PPT, one of the exemptions is if it's nil rated or exempted, even if it's B2B transaction, it is exempted from the provisions of e-invoicing.
Thank you, ma'am. That was all. That was all the questions. Thank you for the session, ma'am.
Okay. Thank you.
Okay. Pooja ma'am, are you here?
Yes, I'm here.
So, every good evening, members. We have Pooja Desai with us. She'll be taking you through the next session, which is overseas investment rules and governance. First, I would like to tell you about Miss Pooja Desai. She is a practicing since last 10 years area of practice, cross-border advisory services, direct tax laws, FEMA, international tax, etc. She is also associated as director in MNCs and involved in USA business established by way of startup or acquisition. She has also delivered lectures in various institutions. Over to you, Pooja ma'am.
Yeah. First of all, thank you so much, CP committee, for giving me chance to present my thoughts regarding OI rule subject. Let me share my screen first of all. So it's visible, Shrey? Is it visible?
Yes, ma'am, it is visible.
Great. So, first of all, thank you, CP committee, and a warm welcome to you on this webinar on a subject which has a great deal of interest on OI rules and regulation 2022. I have no surprise why there is so much interest on this subject. First of all, we have seen an increased level of global investment out of India, right? Nowadays, so many large offices or so many large family wants to diversify that portfolio outside India. They want to have a base outside India, and therefore the question arises how they should set up entity outside India, how they should invest fund outside India, right? From the question, from the beginning, to have an idea how to set up company outside India, people have so many questions in their mind. Is the activity is called a financial activity? Is the activity or the investment is dealing with round tripping? Is there a strategic sector or not? All these queries are answered in new OI rules 2022. So there are drastic, and everyone just want to go global, and therefore there is a great interest on this topic, OI rules 2022. So let's understand the objective of this. Just a minute. Let's understand the objective, why this regulation is so important. As we discussed, that when a large office or large family wants to set up a company outside India, what would be their first question? As a consultant, what can we guide them? What can we suggest them? So, first of all, as a consultant, we should know the objective of our client. What is the objective? Many a times, objective may be to set up a just investing company, to maybe a setup trading or manufacturing entity. Many a times, large family or office wishes to set up entity just to get listed in outside in a foreign country. So we should know the objective first of all, and after knowing the objective, we should give them the options which kind of entity one should open. For example, in US there are two kind of entity, LLC or INC. So based on the objective, we can suggest our client which kind of entity shall we open. We should do the feasibility study for each options. Nowadays, what happened that entity can be open in a one day, right? There is no big deal to set up entity outside India. But to open entity, having a proper study is a challenge. So one should do a feasibility study for each and every options. One should do cost benefit analysis. Even not only the FEMA angle, not only the taxation angle, but one should check the transfer pricing regulations. And from all these, considering all these aspects, one can give the advice for the structure. This is the preliminary background. Now, today's topic is Overseas Investment Rules and Regulation 2022. Let me give you a brief background that earlier there was the OI rules, ODI regulations, known under FEMA 120 rule. So it is very famous and known by ODI regulations, which deal with overseas investment activities and acquisition of immovable property outside India dealt with FEMA notification 7R. Because of ease of business and to liberalize the policy of Indian investment outside India, RBI has issued draft rules and regulations on 9th August 2021 for public comment. So there are so many investors has represented their view with RBI, and from various views, RBI has announced ODI regulations on 22nd August 2022. These new ODI regulations applied immediately after it is issued. Now, friends, we have to be careful that with new OI rules and regulations 2022, the old rules, that is 120, FEMA 120, and notification 7R has been superseded. So now, for any further investment, one has to see the new OI rules 2022. Now, earlier there was a overseas direct rules which has no specific definition given for each transaction. So always there is a confusion arise between a client and AD bank, and therefore they have to represent their matter before RBI. And so the procedure, become cumbersome. Now, for ease of business, OI Rules 2022 comes with clarity with respect to various definitions. So there are so many definitions has been clarified clearly to avoid confusions. They have introduced strategic sector that we will go and see in detail further at a later stage. Key changes is that in new OI rules regulation, there were certain requirement of approval with RBI that has been dispensed of. That means for certain class of things, now there is no need for RBI approval and put under automatic route. That is very welcoming change, I must say. And the most significant change has been done in OI rules by introducing LSF, late submission fees. Earlier, friends, what happened? That for any delay or any mistake in compliance matter, client has to file or do compounding application. That is very cumbersome. Now, RBI has introduced LSF, late submission filing fees, that provide ease to many clients, because you just have to pay fees and you can order your house in compliance terms. So friends, now new regulations divided into overseas investment rules, overseas investment regulations, and overseas investment directions. Rules and regulations deal with how one should make remittance. It's all about making policies, right? Whereas direction is talking about implementation, operational work. So for easiness of compliance and for harmonious work, one has to read rules, regulation, and direction together. Many a times, rules and regulations have not clarified some definitions, but in direction, it is clearly defined the process and the definition. So direction is very helpful for compliance purpose work. And therefore, rules, regulation, and direction has to be read together. This is the glimpse of overseas investment rules. There are 21 rules and 5 schedules. These rules are about definition, power of RBI, where the rules are not applicable, that is clearly mentioned. The debt and non-debt instrument is clearly defined in the rules. Existing investment and FC deemed in compliance with new regime. So if you have done earlier compliance with old regime, now automatically transferred to new regime. That is clearly defined in the rules. Right issue, bonus issue, prohibition on investment. There are several conditions for overseas investment by Indian entity, by resident individual. There were pricing guidelines given specifically in rule number 16. There are specific provisions given for transfer of investment and liquidation. So these are the glimpses of rules, and there are 5 schedules, which are of manner of making ODI by Indian entity, manner of making OPI by Indian entity, manner of overseas investment by resident individual, and 2 more. Overseas investment regulations are talking about definitions, financial commitment by Indian entity by modes other than equity capital, financial commitment by way of debt, by way of guarantee, by way of pledge. Now, acquisition or transfer by way of deferred payment, that is one welcoming change has been made. How to make payment, how to report delay in the compliance, restriction on further financial commitment, everything is mentioned in overseas investment regulations. And overseas investment directions are made of definitions, general provisions, specific provisions, and other operational instruction. So this is how the structure has been made of OI rules 2022. Now, new overseas investment rules not applicable to any investment made outside India by financial institution in IFSC, right? Second point, acquisition or reinvestment outside India if it has been done from RFC account. So friends, RFC account is for returning Indian. When a person comes to India, they are allowed to have an account which can be maintained in foreign currency. They might have foreign obligations, foreign payment obligation, and for that, Indian government has allowed them to maintain account in foreign currency. So if they have made any investment from RFC account, OI rules not applicable to them. Investment in foreign security or immovable property acquired by inheritance or where a person was person resident outside India. So when a person goes outside India, and when, as per rule section number 6(4), if they are buying asset being person resident outside India, and after coming India, they can hold that asset. There is no issue in that. And OI rules, of course, not applicable to them, because OI rules applicable to person resident in India. Now, let's see the important definition as per new OI rules and key changes arising therefrom. Earlier, in erstwhile regime, the OI rules known as the direct investment outside India, whereas now current regime we called overseas direct investment. In erstwhile regime, there was no clear distinction between ODI and OPI. Now, what is ODI and what is OPI, we will discuss in next slide. This is very important terms. So friends, now any client or any person wants to invest outside India, whether it is called ODI or OPI, there is no clear definition has been given in erstwhile regime. And therefore, many a times, AD Bank has to go with RBI to take view or approval. But to smoothen the process, in current regime, clear definition and explanation given for ODI, that is overseas direct investment, and OPI, overseas portfolio investment. Earlier, OPI was governed by liberalized remittance scheme. Now, to smoothen the process, ODI and OPI governed by OI Rules 2022. So, in the current regime, they have clearly given the definition and explanation for ODI and OPI, which increase the easiness of the compliance work. Now, what is overseas direct investment? Overseas direct investment means when unlisted company, or in case of unlisted foreign, when Indian entity or a person invest in unlisted foreign entity by way of acquisition or by way of subscription to memorandum of association, then it is called overseas direct investment. When a person invests in listed foreign entity, in that case, if a person invests more than 10% in equity capital, then it is called ODI. Or if investment is less than 10% but having control, then it is called ODI. Now here, important term is what is control. That we will check in the next slide. But control is clearly defined in OI Rules 2022. So what is takeaway from this slide is that if a person invests in unlisted entity, unlisted foreign entity, it is called ODI. And in case of listed entity, if investment is more than 10% equity capital, it is ODI. And less than 10% with control, it is ODI. Right? There are various modes from which you can invest in foreign entity. For example, subscription to memorandum of association. You can purchase of equity capital, acquisition through bidding or tender procedure, acquisition by way of right issue or allotment of bonus shares, swap of securities, and merger, demerger, or amalgamation. So these are the various ways to invest in foreign entity. It is one thing one should note that it is clearly mentioned in OI rules that once you invest in foreign entity as an ODI, it continues to be ODI despite your holding falls below the threshold. Let me give you one example that if you are investing in listed entity having 10% equity share capital, and therefore it is called ODI, overseas direct investment. Now, for the sum of the reason or for dilution, if your percentage of equity shares reduced to 8%, still the investment is called overseas direct investment. Now, what is overseas portfolio investment? Investment other than ODI is called overseas portfolio investment. That means, first of all, I need to check whether the investment is ODI or not. If investment is not ODI, then it is called OPI. But it does not include unlisted debt instrument and any security issued by a person resident in India who is not in IFSC. Now the question arises, what is debt instrument? So in OI Rules 2022, it is clearly mentioned that debt instrument means other than capital, like government bonds, corporate bonds, borrowing by firms through loan, depository receipt, all is called debt instrument. So, what is the takeaway from this slide? That the investment which are not ODI and which are not unlisted debt instrument are called OPI. What is the limit of OPI? One can invest 50% of the net worth as on the last of its audited balance sheet in foreign entity. That is the limit of OPI. And for resident individual, its LRS limit, that is $250,000 US dollar. Now, how can one make OPI? In case of listed Indian company, it can be done by way of reinvestment. Whereas in case of unlisted Indian company, it can be done by way of right issue, allotment of bonus shares, swap of securities, merger, demerger, amalgamations. Friends, it is to be noted that earlier unlisted Indian company were not permitted to make OPI. Now, this is very important. This is the heart of the OI rules. What is control? Because these definitions decide many other important points. Earlier, in erstwhile rule, there was no clear definition has been given for control. So, normal definition of control is 50% of board of directors having control over managing right? But in Overseas Investment Rules 2022, specific definition of the control has been given. That is the right to appoint majority of directors or to control management or policy decisions. Even by virtue of their shareholding, management rights, shareholders agreement or voting agreement that entitled them 10% or more voting rights or in any other matter called control. So friends, if one has a right to appoint majority of directors or to have a management or policy decisions or having a 10% or more voting right It's called control. Now, what is the permissible limit for overseas investment in foreign entity? So there is no change in erstwhile regime and current regime. That is 400% of net worth of Indian entity as on the date of last audited balance sheet. So in that limit, there has been no change. Now, what is the meaning of net worth? So earlier, net worth means paid up capital plus free reserves. But in current regime, in OI Rules 2022, net worth has been defined under Companies Act 2013. So you have to take the definition of net worth as per Companies Act 2013. Now, earlier, to consider 400% limit, you can club net worth of holding company and subsidiary company. But in new regime, it is discontinued. That means holding company and subsidiaries companies' net worth can't be clubbed to consider 400% limit. That is one biggest change has been made. Now, another change has been done that holding company or subsidiary company can provide guarantee to Indian entity or for Indian entity to overseas entity. Even guarantee in earlier regime, guarantee could not provide it to second layer subsidiary, right? But that has been done away. That means now in new regime, one can give guarantee to second level subsidiary entity. That is one welcoming change has been made in new OI rules. So friends, for giving guarantee, you can give guarantee to your subsidiary company or second level subsidiary company. There is no restriction to that. But to consider 400% limit, the companies should be considered different identity. So holding company can consider its own limit and subsidiary company can consider its own limit. Now, what is bona fide business activity? In erstwhile regime, there is no definition given for bona fide business activity. Now, where this terms is useful? It is mentioned in the OI rule that foreign entity shall be engaged in bona fide business activity. Now, what is bona fide business activity? Everyone is interpreting this term as per their own comfort, right? But now, in current regime, this is specifically given that any business activity permissible under any law in India or overseas called business bona fide business activity. Now, overseas investment by way of debt. Earlier, there was only one requirement that if one has made equity participation, then they can do debt investment. There is no threshold limit for that, right? So if one has made worth 1,000 USD dollar as a equity investment, he or she can made $250,000 as a loan investment. There is no restriction in that. But in new regime, it is clearly said that Indian entity should be eligible to make ODI. ODI should be made and Indian entity has control in foreign entity. Control means they have a policy decisions, they have more than 10% voting power in foreign entity. Then debt investment can be made. So this is one substantial change has been made in new OI rules 2022. Keeping aside to the transfer pricing regulations, there was no mandatory requirement of loan agreement and arm's length price interest in FEMA notification. But in new OI rule, it is clearly mentioned that if you are making overseas investment by way of debt, then it should be backed by loan agreement and it should be at arm's length interest. Arm's length price interest shall be charged. So there are some small changes has been made, but they are very effective and substantial changes. Now, what is strategic sector? Strategic sector include energy and natural resources sectors such as oil, gas, coal, mineral, submarine cable system, and startup, and any other sector or subsector as deemed fit by central government. The restricted of limited liability structure of foreign entities shall not be mandatory. An unincorporated entity can make overseas direct investment. So in this strategic sector, even if foreign entity has no limited liability, one can invest in that entity. So the rule has been liberalized and the possibility of investment has been increased from this liberalized provision. Now, overseas direct investment in financial sector activity. So, earlier, overseas direct investment by Indian entity engaged in financial sector were permissible if the Indian entity has net profit during past 3 years, the Indian entity is registered with or regulated by Financial Service Regulator in India, approval taken from Indian regulator and host country regulators. So these are the erstwhile regime. Here, there are no substantial change has been made, but a key change has been made in the third point that if host country is not required to regulated by any regulator, then there is no approval required. That means, of course, in India, except OI rules, from Indian regulators like SEBI, RBI, that approval one should get, but they do not require host countries' approval. So that is one significant change has been made. The another significant change is earlier AIF can make overseas portfolio investment in overseas companies having Indian connection. Now that Indian connection word has been removed. So now AIF can make overseas portfolio investment in overseas company even without having India connection. So the possibility of investment has been increased drastically. Earlier we talked about overseas direct investment by Indian entity which is engaged in finance sector. Now one substantial change has been made that the Indian entity not engaged in financial sector can also invest in finance activity outside India without any restriction. So only one condition of 3-year last Indian entity posted net profit during preceding 3 years, that is the only condition has to follow. Otherwise, there is no other restriction to invest outside India in financial activity. So let me give you one example, that Indian entity, which is manufacturing entity, investing in foreign entity, that is a special purpose vehicle. And that SPV is investing in US listed company or unlisted company. So in earlier overseas investment rules, it is strictly prohibited that one cannot invest in financial sector activity. Now, from this change, it can be said that Indian entity can invest in any specific special purpose vehicle, and that can invest into many various opportunities. So it seems that it is allowed, but we have to take the concern of AD Bank and RBI before going to this kind of structure. Now, investment in IFSC, that is GIFT City. So, investment in GIFT City. GIFT City is a territory or is a foreign territory for Indian people. So, whenever Indian person invest in GIFT City, OI rule will be applicable. Now, there are very much relaxation has been given to invest in the GIFT City. Like 3-year profit condition is not applicable to person who is investing in the GIFT City. Even no restriction to make investment in OPI in financial sector by resident individual and resident and Indian entity. Resident individual can make overseas direct investment in financial activity in IFSC. So the provision has been liberalized to the great extent to encourage the investment in GIFT City. Now, this is one of the biggest issue which we were all waiting for this, that round-tripping issue. Earlier, in erstwhile regime, for any kind of ODI FDI structure, we required RBI approval. Though it is not mentioned in any rules and regulation, but in 2019 FAQ, it is clearly mentioned that if one has made ODI, for example, from India, one has made investment outside India, and again that entity has made investment in India, it's called round tripping because its ODI FDI structure, it was not permitted in erstwhile regime. Now, in current regime, ODI FDI structure is allowed, subject to structure not being designed for tax evasion or avoidance purpose, of course. So the intention to change this proper regulation and rules, that many times a genuine structures where a company invests outside India and that company investing in India genuinely in some opportunity, not for tax purpose, but for economic substance, right? But they were not allowed, or they were allowed subject to approvals. They made petition to the RBI, and therefore RBI came with a change that ODI FDI structure is allowed. Of course, we have to check the intention, and this ODI FDI structure is allowed up to 2 layers of subsidiary, right? Now, what is 2 layer? That if Indian company is investing in foreign company, then foreign entity will be the level 1. This foreign company will be the level 1. And from this level, 1 and 2 subsidiary should be counted, right? So 2-layer subsidiary can be allowed. For more than 2-layer subsidiary, one should take the RBI approval. And what is the subsidiary company? For that, control definition works effectively. Subsidiary shall have the meaning as provided in the overseas investment rule, means entity in which foreign entity has a control. That means 10% or more voting power. Then a company is called a subsidiary company. So from this slide, we can take out that subsidiary ODI FDI structure is allowed. ODI FDI structure is allowed till 2 layers of subsidiary. Entity after foreign entity will be considered as a layer 1. And what is subsidiary company? That is having a more than 10% of voting power. That means having a control called subsidiary company. This is the illustration. So now P company is in India, investing outside India in foreign company. Foreign company may invest out in foreign FCO 2 or ICO 1, anyone. That is called layer number 1. And that entity invests in India, that is operating company, that is called layer number 2. So this is allowed without any approval. And if operating company wants to set up a subsidiary company in India, that is layer 3, at that time, they have to take RBI approval. Now, if money doesn't come back to India, despite several layers, for example, my Indian company is opening a subsidiary company outside India, for example, in US, then in Germany, then in Singapore, then there is no restriction for 2, 3, 4 layers. Restriction comes when the investment money comes to India. Now, this round-tripping structure not applicable to banking company, NBFC company, and government company. So they are allowed to have more than 2 layers of subsidiary entity. Overseas investment by resident individuals. So erstwhile, overseas investment by resident individual was built with LRS, Liberalized Remittance Scheme. Now it is governed under OI Rules 2022. Earlier, the limit was $250,000, which is same in the current regime. Now, in earlier regime, resident Indian invested in foreign entity. Such foreign entity shall not have further subsidiary company or step-down subsidiary company. So once resident individual investing outside India cannot have any other layer of subsidiary or step-down subsidiary company. Now in current regime, it is clearly mentioned that if resident Indian has control in foreign entity, then only they cannot have further subsidiary or step-down subsidiary company. So, for example, resident individual has taken 2 or 3% stake in foreign entity, they may have subsidiary entity outside India. That in that there is no restriction. Restriction is there when only resident individual has a control in foreign entity. In inheritance, in current regime, there is no restriction. inheritance is permissible, and even in gift from relative, any amount of gift is permissible. But from person resident outside India, gift can be made accordance with the FCRA rules. Now, which are the restricted activities? There was in earlier regime also, real estate activity is restricted. So what is real estate activity? Real estate activity means buying and selling land or property. That is called real estate activity. But real estate development is allowed. That means once you buy a land, then develop a project, that is allowed under FEMA, but real estate trading activity is prohibited. Gambling in any form is prohibited, or dealing with financial products linked to the Indian rupee without special approval of RBI is restricted. So we covered the main aspect of the OI rules. Let's check the other aspect at bird eye views. Now, pricing guidelines, transfer and disinvestment. So, pricing guidelines should be at arm's length price. Now, what is arm's length price? That valuation method should be calculated as per internationally accepted methods, right? What are the conditions for disinvestment of ODI? The transferor must have stayed investment at least for 1 year, and there are no dues outstanding from the foreign entity. Then only one can do disinvestment. Liquidation of foreign entity will be subject to approval of competent authority. In certain transfers, you need approval of competent authority in India or a host country, like in case of a merger amalgamation or on account of a buyback. This one change has been made, very positive change has been made. Earlier, deferred payment was not allowed. But in current regime, deferred payment is allowed from the date specified in agreement. That amount should be decided in upfront, and deferred part to be considered as a non-fund based commitment, of course. And valuation also to be done upfront. So for example, if I am making investment, my Indian entity is making investment in foreign entities, say 500,000 USD. But I'll make a payment first tranche in January 24, second tranche in June 24, third tranche in December 24. And having this specified value, every time I'll send $100,000 as per this valuation report. If the terms are defined at the time of agreement, at the time of first ODI, then it is allowed. Earlier it was not allowed, but now they have made a very positive and welcoming change. Obligation of person resident in India in case of ODI, that once you make investment in foreign entity, then you have to submit share certificate or relevant document within 6 months from the date of remittance or from the date dues were capitalized to your AD bank. Even if you submit the ODI document that is called now FC form, AD Bank will give you UIN, that is unique identification number. That is that number related to all RBI transaction, inbound and outbound transaction that reflect in that UIN number. And friends, please note that all transactions shall be routed through same AD Bank. You cannot differ a bank as qua investment. It should be one or same authorized dealer bank. So these are practical things which one should consider while doing ODI. These are approval requirement. So where central government approval required, where RBI approval required, and other approval required are mentioned in this chart. Now, what are the reporting requirements? See, at the time of making investment, you have to file FC form. You can file OPI form within 60 days from the end of the half year when it is OPI. In case of disinvestment, you have to file section G in form FC. In case of restructuring, you have to file section F from form FC. These are the various sections in the form FC that you have to file. APR, Annual Performance Report for ODI in foreign entity by person resident in India, form FPR. Now, friends, everyone is facing issue that in case of APR, one has to file audited financial statement of foreign entity. Even though in foreign or in host country, audit is not mandatory, right? So yes, we all are facing the same issues, and as rules are mentioned that one has to submit audited report, that is mandatory requirement. So one has to submit audited financial report of host country with this APR form. Another return is annual return on FLA, foreign liability and asset, by Indian entity which has to made ODI in form FLA. So these are the various reporting forms one has to take care. Now this is all about late submission fees. So mainly late submission fees is 7,500 for normal contraventions, or for other contraventions it is calculated as per the formula given. And LSF is payable to the RBI regional office. It is directly paid to the RBI regional office. So we have to prepare one draft in the name of RBI and we have to submit the LSF fees for any contraventions or any delay in compliances. This we have seen, till now we have seen OI rules that was earlier, which was known as a FEMA 120. Now, acquiring property outside India, that is governed by OI rule itself, OI rule 2022. But in erstwhile regime, it was considered or regulated by notification number 7R. As time doesn't permit much, we will see as a bird eye views that one can acquire immovable property outside India by way of inheritance. From RFC account, we discussed the definition of RFC account in earlier. Purchase of LRS remittances jointly with a relative who is person resident outside India, or and out of income or sale proceed of the asset other than ODI acquired overseas in accordance with the FEMA. So there are various ways: inheritance, RFC account, LRS way, from a jointly with a relative, or out of income of sale proceeds. We can acquire immovable property outside India. Now, acquiring immovable property outside India, there are exemptions given whom this regulation is not applicable. Foreign national, they are exempt from these regulations. Immovable property acquired on or before 8th July 1947 and continue to be held They don't have to follow OI rules. And property acquired by a person resident in India on a lease less than 5 years. So this is current account transaction. This is not capital account transaction, and therefore OI rules is not applicable. Now, foreign nationals are exempt from these regulations. So, for example, a person came from Germany for employment of business in India, right? So, German national comes India for employment purpose. So, as per FEMA definition, the moment he comes India for employment purpose is called person resident in India. So whenever German national comes to India for employment purpose and now he wants to buy a property outside India, he has to follow OI rules 2022 because he is considered as a person resident in India, right? And $250,000 limit will be applicable to him. Of course, German national can buy property from the funds lying in German account. There is no issue in that. There is no restriction in that. But if he wants to remit fund from India, he has to follow OI rules 2022. Even he cannot take a loan from bank outside India, like from Germany, because he is a person resident in India. So one has to consider this aspect during the case. Purchase of property by residents. So purchase is permitted under LRS. Lease is also permitted. Sale is permitted. Retaining fund outside India is permitted, and reinvestment in of those funds are permitted. So in nutshell, everything is permissible. Now, gift or inheritance. Can a resident gift of immovable property to another resident, or can he inherit the another person? Yes, there are no issue in that. Earlier, before 7R comes to existence, there were a provision that if one Indian resident wants to gift immovable property to another Indian resident situated outside India, then one has to sell that property and get back those funds. Now, the liberalization has been done, and one can gift or inheritance property outside India without any restriction. Of course, one has to check that as long as the Indian resident has acquired the immovable property as per the FEMA law at the time of buying, that condition is always there. There are some few points that one has to check that one individual can remit money under LRS in foreign bank account and can buy when sufficient funds are available. So for example, property is having a $500,000, but one individual can send per financial year only $250,000. Then he can send or remit money $250,000 per financial year. In second year, he can also remit $250,000, and then he can buy property. No issue in that. If there are more than one family member, then if me, my spouse, they both are remitting $250,000, then they can buy property jointly, but in the name of joint name with same proportion. So no issue in that. One cannot take a loan in India or abroad because LRS provision itself is talking about having own fund. So one cannot take a loan to buy a property outside India, right? A branch of Indian company can buy immovable property for business or staff residence. So one Indian company having a branch outside India can buy immovable property for his business or staff residence purpose. No approval is required for the same. if foreign company buys immovable property for own use, it is permitted. There is no issue in that, but it should be commensurate with the business as per FEMA notification 120, which is also applicable in new OI rules 2022. Indian resident cannot acquire immovable property as the remuneration. Of course, it is not allowed, and prior approval of RBI is required. So these we covered for immovable property outside India, which deals with OI rules 2022. Now, there is one practical question that one Indian entity has not filed Form FCTRS. Form FCTRS is for the transfer of shares, right? That procedure has been done before 10 years. Now one can file or one can pay LSF and regularize the compliance. Is it true? So in practical case, this is not right. One has to file FCTRS form as of today with all the documents like FIRC, KYC, declarations, and many other attachment. One has to file FCTRS now, and then only can file LSF and regularize the compliance. So LSF is not a shortcut to comply all the compliances. Rather, one should comply the compliances, file the forms, and then by paying late fees, they can rectify the transactions. Thank you. Thank you for your time.
Thank you, Pooja.
Anyone has a question? Yeah.
Yes, ma'am, there is one question.
Yeah, sure.
Is trading in forex and shares in foreign exchanges permitted for Indian residents?
Okay, trading in forex. Your voice is breaking.
Okay. The question is trading in forex and shares in foreign exchanges permitted for Indian residents?
Yes. So see, trading is not an investing activity, right? It's not a financial activity though. So it is very gray area where one can decide whether it is a bona fide business activity, whether there is an investment activity, whether there is a fall under financial activity or not. That is a very gray area that foreign exchange fall under this definition or not. So earlier it is not allowed, but now they have introduced that financial activity is allowed, right? Now we have to check whether this trading in foreign exchange is allowed, is called financial activity or not. That is a very gray area, and that is a question to everyone. For that, you please recommend your AD bank and just talk with them that we are going to set up entity or we are going to do activity in financial transactions called this. Is it allowable or not? Let's check the answer from AD bank. Any other question?
No, ma'am. That would be all, ma'am. There is only one question
Okay.
for this session.
Okay.
Thank you for the session, ma'am.
Thank you so much. Okay,
We would like to thank Bani ma'am and Pooja ma'am for enlightening us with their immense knowledge. We are sure the members must have gained a good awareness about the topics of webinar. Thank you for the session, both Bani ma'am and Pooja ma'am.
Thank you.